you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everybody. This is Harold Green of Breakthrough Financial Group, and it is time to stop doing what you hate. How are you doing today? Hopefully, you folks are having a fantastic day today. I think I'm doing all right. It's super early in the morning. Couldn't quite sleep last night. Didn't get that touch from the sleep angel that, or the sleep fairy that come and sprinkle the little dust and help you sleep. But man, I just had some stuff that I was excited about and some things that that have been going through my mind that I wanted to share with you folks. And so it's been a very interesting week. It's such a privilege and such an honor, such a blessing to just to be sitting here and sharing what I'm about to share with you folks today. And as you folks know, we are in a series called Get the Money, Keep the Money. And of course, that's a little bit different than the title of my podcast show, Stop Doing What You Hate, How to Win the Retirement Game. But, you know, there's a system inside of a system that's inside of a system. You know, there's always something deeper when you dive down into it. And the primary reason why people can't successfully retire the way they want to is because there's just some simple things that they're missing, some simple things that either they don't understand or some things that the people on their team don't understand. There could be some gaps and basically just a lack of knowledge. But in my shows, I talk about a lot of different stuff. I talk about politics. I talk about faith. I talk about finances, of course. And, you know, some people say, oh, you're not supposed to talk about religion and politics because it causes fights and things like that. And here's my thing. The more you know about things, the more you understand about things, the more successful you can become. And you don't have to be silly with talking about faith, and you don't have to be silly when talking about politics, and you don't have to be silly when trying to understand finances. I think too many people have dug themselves into a position and they're too prideful to understand, you know, what if I'm wrong on this? What if I'm not seeing this the right way? What if the person I'm talking to is correct? And I think we all need to do a better job of being patient with each other and then understanding each other. And so today, what we're going to be talking about is something totally serious. And it's about timing the stock market. And timing the stock market is a get the money strategy. We're going to be talking about investments. And so all investments do carry risk of loss. Before you invest any money, do your own research, do your own due diligence, meet with a professional, understand your risk tolerance, your time horizon, and your objectives before you do anything. And as a reminder, this show is for informational purposes only. Do not trade on anything you hear in this show without doing your due diligence first. Don't say Harold said buy this. No, Harold did not say buy Jack. All right. So are you ready? 1, 2, 3. Let's get it. Some time ago, I did a show titled Is the Stock Market Rigged? And my summation of all this is no, I don't think the stock market is rigged, but I do think the market can be manipulated. And that's a very touchy thing. And so, you know, I want to get into it, but I'm going to start off with some faith stuff real quick. And you may say, well, what does faith have to do with timing the stock market? Well, the faith has a lot to do with a lot of stuff. And I'm going to read to you just one verse out of one chapter. And I encourage you to go back and read the whole thing by yourself when you have time. And it's Proverbs chapter 2, verse 9. It says, then you will understand righteousness, comma, justice, comma, and fair dealing in every area and relation. Yes, you will understand every good path. Wow. I'm telling you, man, chapter 2 is deep. Go back and read it, study it, observe it, and then put it into practice. So we're going to get into the timing of the stock market, but what I want to do is drop this on you real quick. I'm going to talk about rapid retire real quick, because we do look at ways that you can be successful. I wouldn't say timing the market. I would say timing certain positions in the market, and there's strategies to that. System inside of a system. Rapid retire is a get the money program. It consists of income generation, cash flow management, cash reserve systems. And when you implement all three of these in unison, you can get a very powerful thing going for you. So let's get into it. Timing the stock market. There's a quote out there or a phrase that says, time in the market is more important than timing the market. And if you're going to set out to try to time the stock market, a couple of things you got to understand. Number one, you have to identify your objective. Like, what is it that you're after? Are you after one, short-term success to fund something, or after two, long-term goal over retirement, or three, a combination of both? Inside of our program, I have a lot of clients with a lot of different needs, and their portfolios are sorted. I have groups of people that are long-term with options. I have some people that are income-based portfolios with options. There's just a plethora of different systems or trading styles that I have in these different portfolios for these clients based on certain objectives, right? And so I know what they all need. We have a huge spreadsheet of everybody that needs money every single month for retirement. I used to be an air traffic controller. And the one thing about being a controller is you need to know where your planes are at all times. You know where that plane is. The pilot knows where that plane is. And if any one of you at any time don't know where you are, that is a recipe for disaster. All right. So you got to know where you're at. You got to know where you're flying. Okay. Where you're going to. And, I look at it like this. I sometimes go by the one stock theory. And the one stock theory is real simple. If I could only buy, trade one stock for the rest of my entire life, what would it be? And I did some thinking on this. And even before I got real heavy in the investment world, I was what I would call an observationist. I love watching people. I love observing things. I could sit there and watch a tractor work all day, how it would just go and dig and it would do things, or a crane, just the way it moves. I love observing things, people in parks playing with their kids. I'm birds flying. I observe. And when I put this into practice, bottom line, this is going to require you to have tons of observations. Okay. So back in 2019, I'm going to tell you a quick story. Back in 2019, I went to a foreign country for a short trip, and that foreign country was Japan. And, and I was in the investment world at the time. And so I was told and heard on the news and read in the papers and all the stuff that, the people of China, they don't have money. Their economy was about to tank. It was headed for ruin. And this was in November of 2019. And so this is what I observed as I shopped in Nagoya with my wife. What I saw just baffled me. I saw buses pulling up to the mall with tons of Chinese tourists. Now I thought, wait a minute. Why would people be in China spending their money if they're going broke? Why would they do that? They were pulling up to the mall with suitcases. No, they did not just come from the airport. And here's what they were doing. They were buying things up in the mall by the suitcases. I watched my wife stand in line at some of the cosmetics places, with the little stands or whatnot. And she's looking for certain stuff. And these people were packing their suitcases full of stuff. Now, if what I heard on TV was true and what I read in the newspapers was true, why was I seeing something different with my own eyes, right? So guess what trade I made after seeing this? I'll tell you later. But I said, man, either somebody's manipulating the market, they're trying to paint a narrative for a trade, something's going on. This ain't right. What I'm reading is wrong. Certain segments maybe, but then no, I can't see it. And this is 2019. This is before COVID. All right. November of 2019. COVID was out. COVID was out in November of 2019. They have facts to back that up. So timing the stock market is one of the greatest mysteries of all times, right? Many people say you can't time the stock market. And my thing is, if that is true, then why do so many people have success in the market while others fail miserably? And it dawned on me that it's two reasons why. Number one, some people have bad judgment. And number two, some people simply have bad timing. And sometimes it's three, a combination of both bad judgment and bad timing. So what am I talking about when we look at the bad judgment stuff? Well, to me, this is buying stuff you hear about on TV without any research at all. Somebody will say, hey, this and that on TV. And it's like, okay, this is what's going on here and there. And, this sector is trend, da-da-da-da. And then boom, you didn't do your own research. You don't even know if that stock is right for you in your risk tolerance. You have no idea what you're getting yourself into other than the fact that somebody said it on TV. I've tried that a couple of times just, with small trades, just to see, what these experts were talking about. I tell you, in very small amounts, I kid you not, within days, that stuff went to garbage, right? And then a year later, they're back on TV and somebody asked them, hey, whatever happened to that stock? Man, I'm still in it. We're still holding it. And it's like, yo, this is why people shouldn't do stuff like that, right? And who knows what the position size was that they had. You don't know if it was a part of the portfolio, like 1%, 0.5%. You have no idea. And of course, what I'm telling you, if you're successful at anything, you know already, you're not going to go and try to do stuff at your job based on what somebody said on TV. You're not going to do that. All right. Number two, buying stuff they hear their peers buying without any research, things you hear at work, just all kinds of stuff. Somebody told me about a stock not too long ago, and I was like, yo, no, no, really? I said, nope, why not? And I was like, I listed all my reasons. And sure enough, that stock is going down right now, right? There's certain things you have to understand. And and this is funny because I did a simple Google search about timing the market, and this is what they came up with. Some simple things you should know, like how did you time the stock market? Market timing tips every investor should know. And I'll just read, it's to study long-term cycles, watch the calendar, ranges that set up trends, buy near support levels, build bottom fishing skills. Like when I'm looking for catfish, no. Identify correlated markets, hold until it's time to sell. The bottom line, like, what are you talking about here, right? What is a long-term cycle? Like, what is that? Watch the calendar. What calendar? What are you talking about? And these are all things that you have to dive into and dig into. And I do have a calendar, and what I do is I put important dates in there. We have this huge spreadsheet of options, like when they expire and stuff like that, the percentages and so on and so forth. And bottom fishing, I don't bottom fish. I have another strategy I'll talk to you about in a second. Hold until it's time to sell. When is that, right? When is it time to sell? And I'll tell you, right? You won't know. You will not know it's time to sell because you can be in and out of a position. So you put a 5% stop, boom, it hits 6% and then bounce up 20. You're out at 6%. You set your stop at, you set your stop at 5, right? You got stopped out at 5 and it went down 1 more percent lower and then it bounced up 20. And you're like, oh man, I missed it. Oh God. Bad timing. Selling a stock at the wrong time or buying it at the wrong time has been the death of many people's trading aspirations, right? They get burned. They get jaded. They're like, oh my God, the stock market is rigged. That's why so many people think the stock market is rigged, because they get in and get out at the wrong time for the wrong reasons. It's purely emotional, and you have to have like nerves of steel. You almost have to be like a comedian, like you laugh on stage, but behind the scenes, you're like this cold, dark person where it's like, oh my God, you probably never laugh at home, but you get people laughing on stage and it seems like you're having a lot of fun. The investment world is a little bit similar. And I'll be honest with you, a lot of traders have PTSD, some sort of PTSD, some sort of anxiety, because you don't know where the booms are coming from or the busts are coming from. You don't know what's around the corner. And so I'll tell you how to deal with that in a second, how I deal with that. Now, what all of this boils down to is two things. It boils down to understanding technical analysis when you're making trades And then the fundamental analysis, right? The bottom line, what is that? That's the books, the accounting, the cash flow management, right? How much cash they have in reserves, their EBITDA, earnings before taxes and depreciation, all these things you got to know, or at least know where to look. And I have a very simple approach that's really not that simple, but I can break it down into one simple thing, and I call it the coiled spring theory. The coiled spring theory. What is the coiled spring theory? And to implement it, you got to understand a few things. Number one, what the trends are, right? What's hot and popping right now? What's going on right now? Number two, what are some of the themes that you can trade on? Call it like tradable themes. And number three, are the conditions right for a buy? Has the position been beaten down with noise? And I'm telling you, folks, there's a lot of noise out there in the market. And it's very interesting. So some of the examples of the past that have caused what I would say the coiled spring theory is COVID. That was a big one. We're going to go look at some positions that just really popped off during COVID. Subprime debacle of 2007, 2008, all the subprime loans where people were getting stated loans and buying 4 or 5 houses with just stated income. They didn't have to show W-2s. Man, that was garbage. And then the Federal Reserve megaphone. We're going to talk about the Federal Reserve megaphone, right? So what happened with certain stocks? What was the trend? What was the theme? And back then during COVID, what we had is we had the stay-at-home deal. And I'm not knocking stay-at-home right now, but a lot of companies are telling their employees, yo, you got to get back in here at least 3 days a week. Amazon did it. You got to get back in here 3 days a week. We can't have you out there being 27% less productive, right? And I did a market minute for my clients the other day, and I sent it out to them. And we broke down like the CPI, and we looked at it, and it was like 4.7%. Well, what makes up the CPI? Well, you have services, you have all these different things, food, housing, all these things that make up CPI. And when we drill down into it, what we found was like car insurance, like transportation services, like all of that stuff is through the roof. And why? Well, one of the reasons why is because energy costs. Energy costs are just insane. And I think we have a very poor energy policy in this country. It is not working well right now, right? Under the previous administration, had a different energy policy. Under this administration, we have a different energy policy, right? They're all placating to their base. But I guarantee you, if you're having to pay $5 for gas or your car insurance has gone through the roof, you're probably going to be thinking a little bit differently when you go vote next time. But I'm not telling you how to vote and who to vote for. I'm just saying you got to understand how each party affects your opportunities, right? Each political party is going to present some bad things that may happen for you, and they may present some good things that may happen for you. That's why Proverbs 9 is so important. Then you will understand righteousness, justice, and fair dealing in every area and relation. Yes, you will understand every good path. There's good things everywhere. There's good paths everywhere. You just have to find them. But oil cost, it drives up the cost of food. It's keeping inflation higher. So what happened at the stay at home, the work from home, right? Some of the stocks that popped off was just insane. We had Toll Brothers, we had Lennar, we had Restoration Hardware, we had Home Depot, we had Tractor Supply. These things were ripping. Why? Because interest rates were still low back then, and people, they got a 2% mortgage or 3% mortgage or taking out lines of credits, and they had time on their hands to redo their bathroom. A lot of do-it-yourselfers, right? Housing, Toll Brothers, and get this now. This is up until February 12th, 2021. Toll Brothers was up 42, right? And this is I think it's from October 2019 and on up until, so we went through COVID, right? So 42%, Lennar up 58%, Restoration Hardware, 174%, Home Depot, 18%, Tractor Supply, 69%, Amazon, 89%, Teladoc, right? The stay-at-home, you go to the doctor online, 335%. Again, what are you talking about? Tradable themes, right? Coiled spring tradable themes. Tesla, I threw that one in there for fun, man, is up 1,546% just from October 2019 until February 12th, 2021, 1,500%, right? Apple technology, that was up 129%. And then we had Amazon, it was up 89%. Coiled Spring. All right, so the Federal Reserve megaphone, what is that? That's when somebody from the Fed gets out there, when they get on TV, and you got like 200 PhDs in the Federal Reserve, and you got everybody with their own ideas, but they try to be on the same page. They're tasked with the job of, basically controlling monetary theory in the economy, right? They want good employment, they want low cost, and on and on and on. Well, somebody spent a bunch of money. They handed out a bunch of money during COVID, and they spent more. And even some of the top economists are saying, look, y'all, you're spending too much money. You can't keep giving people money to stay home. They don't need it. Nope. They were buying votes. Buying votes is what they were doing. Okay. If some of these programs were great, why do we still have the problems that we have? All this money was spent. It doesn't seem like anything's been fixed. They caused a hell amount of inflation. And that's fact. The economists will tell you that. That is fact. They spent too much. They gave out too much. They put too much money in the economy, more than was necessary. Then we got this train wreck of inflation up 9%. That's insane. When the Fed comes out, we got to get it down. We got to get it down. We got to get it back to 2%. We got to get the interest. We got to get the inflation back to 2%, 2%. And that's what they've been beating on is 2%. Does it really need to be 2? Can it be 3? Can it be 4? I don't know. It depends on what part of the inflation is the issue. If it's energy cost, if energy cost is the main reason why inflation is so high, look, the Fed can do all they want, right? The only thing they're doing is they're driving down demand. And this is how this works. It's supply and demand. The more demand you have with the limited supply is going to be inflated. All right. So that's the issue. Got to get that fixed. But they say things like, oh, well, we still got a long ways to go. A long ways to go to where? Inflation is at 4.7%. You're trying to get it down to 2. It came down from 9. If it was up at 9 and you say, we got a long ways to go. Yeah, okay, I get it. But it's at 4.7, and it's coming down. And that's a good sign. But what are they doing? They're causing harm in the market by jacking up these rates. Okay. And this is why so many people are concerned. Some of the top traders are concerned. They're like, hey, these idiots are going to cause they're going to cause a recession because that's the only way they're going to get inflation back down to 2% is by causing a recession. And some people are saying, hey, there's not going to be a recession because we'll have a soft landing. Some people are saying, hey, we're not going to have any landing at all. This thing is just going to keep humming along. Inflation is going to slowly come down and then the Fed's going to reverse course. But when they come out and say things like, we're going to stay higher for longer, we're going to keep rates higher for longer, we see unemployment ticking up, things like that, it gets a lot of people nervous. And so what it does is it drives down technology stocks, like in the worst way, because yields are going up on treasuries, and you can look all this up and study it, but yields are going up on treasuries. And basically what that simply means is if you want people to take your debt, you got to pay them a higher interest rate. That's all that means. Okay. And so borrowing cost goes up. So a lot of times technology companies have to borrow, in the past they did, in order to do the research and development and so on and so forth. But that's not true anymore. These companies are flushed with cash. And so to me, when I see the stocks get depressed 5, 10, 15% in this type of environment, to me, that is a coiled spring. That is the time that I go in there and I rotate out of stocks that have done well, like we rotated out of energy earlier this year, well, last year, and we rotated in October to, guess what, technology. And so far, that's been amazing. These are the themes. And sometimes you got to be very contrary when you hear people say certain things. I mean, look, I'm going to go back to the chart again. I got it out. I like my charts. All right. And if we just go back and look and we go year to date, right? Year to date from back then, October, some of these companies are still up nice, even with the crazy things that have gone on. Okay. They're up nice, even with the things that have gone on. So, I mean, year to date, these same stocks, when I rerun the chart and trying to get it to pull up here, and Tesla's up 98% year to date. Toll Brothers up 67%. What is it here? Lennar is up 31%. Restoration Hardware is up 36%. Home Depot's up 4%. Tractor Supply is down 2% for the year. Amazon's up 64% for the year. Tesla's up 109%. At one point, now they're only up 98%. And then Apple's up like 45%. So maybe my numbers are off just a little bit here. But again, Apple 45, Toll Brothers 67, Lennar 33, Restoration Hardware 42, Home Depot 5, Tractor Supply is minus 1.90%. Amazon is up 64. Tesla's up 98. And then TDOC is down 3%. So TDOC, we've been out of that a long time ago. I'm just kind of showing you that for if we would have held through all of this stuff, if you were to buy in a whole position. But we're not buying hold. We are rotate, consolidate, and that's pretty much about it. But there are tradable themes. There are things that present coiled spring moments. You have to be willing to get on it, right? You can't be afraid of it. And that's basically what we do for our clients here at Bright Tree Financial Group, or Bright Tree Wealth Management is what we call the company now. So if you're interested in understanding what it is that we can better help you with, and you're interested in our rapid retire financial planning process, give me a call. Get on my schedule, 808-521-4401, and Beverly will get us talking. And so, I just wanted to present this to you. You can't time the market as a whole because the market is made up of individual stocks, individual mutual funds. But you can do your research and find tradable themes, things that are being beaten down, coiled springs, and then you can jump on them. But you know what? Don't jump on a bad company that has bad management. Read the information on them, understand who's running them as best you can. And then you got to do your due diligence on that. It's like you date somebody, right? You want to make sure you understand who you're getting involved with. And you may have to date them for a little bit to find that out, but I'm sure in one or two dates, you can just kind of find things that make you say, yeah, I don't want to do this. This is not going to work. Peace, I'm out. Bye. And that's the same way with certain stocks. Number one, you want to avoid the bad judgment. Number two, you want to avoid the bad timing. And so I just wanted to drop the show on you today. Hopefully it's powerful for you. It's purposeful for you. And it's practical for you. And that's pretty much what I want for everybody. So thanks for tuning in, everybody. And until next time, 1, 2, 3, let's get it.
This is thepodcastfactory.com.